Big move by China today, slashing tariffs in half on $75 billion worth of American goods, and that was sooner than anticipated. Here to talk about what might be behind this move and what it'll mean for the U.S. economy, Tori Smith joins me. She's trade economist at the Heritage Foundation. Tori, welcome. And these headlines certainly grabbed investors' attention worldwide. What do they say to you?
Well, really what this seems like is part of the negotiations post-Phase 1 deal. So, as we know, the Trump administration announced they would be reducing some tariffs by half, and that will go into effect on Valentine's Day. And so China is doing a similar move in kind, and it just seems to be part of that natural business. And we'll see further in the coming weeks how China will fully implement this Phase 1 agreement.
You know, Tori, China hasn't exactly volunteered tariff cuts. I mean, they've been hard fought by the U.S. to win during these trade negotiations. Why does it suddenly seem like they're popping up and saying, hey, look what we're putting on the table? I mean, are they coming from a place of weakness? Is that coronavirus related?
Oh, no. And I think it's really important here to make clear that these are not tariff cuts from the baseline tariffs. What this is a partial rollback of retaliatory tariffs. So the United States did a partial rollback of its tariffs that it imposed on China, and then China did a partial rollback of retaliation. So this is not improving the status quo of 3 years ago in terms of tariff rates being charged between the U.S. and China. It's really just undoing the bad that was done.
How much impact do you think the coronavirus has had on the economy there, and how is that likely to further impact the trade situation between the two countries?
I think really the impacts in the Chinese economy in the long term are really to be seen. It's too soon to make those decisions. But what we honestly need to focus on in the bilateral relationship is how we can move this forward into the Phase 2, in addition to how we can implement Phase 1.
What was the surprise to you, if any, from this announcement today?
It really wasn't a surprise to me at all. I think we were all waiting to see what the reciprocal activity would be by China, given that the United States is doing these drops on February 14th. So happy Valentine's Day to everyone. We'll have a little bit of a decrease in costs from a few weeks ago.
Yeah, to the soybean farmers, maybe some of the energy producers and so forth as well. So then finally, this leaves us moving forward in a period of where we should expect those same sectors to be hard hit from the lack of Chinese demand, because that economy clearly has taken some kind of short-term hit from the virus, from the shutdown of most of the economy the last several weeks. How big an impact will that have on the U.S. economy, do you think?
In terms of the U.S. economy, I think pretty marginal. The important thing here that I think is distinctful is that this decrease in tariffs will actually make it easier for the Chinese to buy things like soybeans. Basically, this list of tariffs that are being reduced correlates with the list of things the administration has asked China to buy more of from the United States: soybeans, other agriculture, energy, and automobiles. So it really just kind of coincides, makes it a little bit easier for China to make those purchases.
Yeah, it makes it cheaper for them. Tori, thanks so much. It's good to see you today. We appreciate it. Tori Smith from Heritage.